Mutual funds have become a popular investment avenue for individuals seeking diversified portfolios and professional management. However, with a plethora of mutual fund options available, selecting the right fund can be overwhelming. Mutual fund ratings provide a valuable tool to navigate this complex landscape and make informed investment decisions. These ratings, assigned by independent agencies, offer a simplified assessment of a fund's performance, risk, and other key characteristics. Understanding these ratings can empower investors to choose funds that align with their financial goals and risk tolerance. Imagine trying to choose the best restaurant in a new city. You might feel lost with so many options. Restaurant reviews and ratings help narrow down the choices and guide you towards a satisfying dining experience. Similarly, mutual fund ratings act as a guide for investors, helping them identify potential investment opportunities. They offer a structured framework for comparing different funds and understanding their strengths and weaknesses. By considering these ratings, investors can potentially avoid making impulsive decisions and instead base their choices on objective assessments. Mutual fund ratings are not a guarantee of future performance, but they provide valuable insights into a fund's historical track record. These ratings consider various factors, including the fund's returns, risk profile, and expense ratio. By analyzing these factors, rating agencies assign scores or stars to mutual funds, indicating their relative merit. This standardized system allows investors to compare funds across different categories and asset classes. Ultimately, mutual fund ratings aim to simplify the investment decision-making process. They provide a concise overview of a fund's key attributes, enabling investors to quickly assess its suitability. While ratings should not be the sole basis for investment decisions, they can serve as a valuable starting point for research. By understanding how these ratings are derived and what they represent, investors can make more informed choices and potentially enhance their investment outcomes. Independent rating agencies play a crucial role in the mutual fund industry by providing objective assessments of fund performance. These agencies, such as Morningstar and CRISIL, employ rigorous methodologies to evaluate various aspects of a mutual fund. Their ratings offer investors a standardized framework for comparing different funds and making informed decisions. These agencies act as independent watchdogs, ensuring transparency and accountability in the mutual fund market. Morningstar, a globally recognized rating agency, is known for its star rating system. This system assigns funds a rating from 1 to 5 stars based on their historical risk-adjusted returns. 5-star ratings indicate superior performance, while 1-star ratings suggest underperformance. CRISIL, a leading Indian rating agency, also provides comprehensive mutual fund ratings. Their ratings consider factors such as portfolio quality, fund manager expertise, and expense ratio. The primary objective of rating agencies is to empower investors with the information they need to make sound investment choices. By providing independent and objective assessments, these agencies help level the playing field between investors and fund managers. This transparency fosters greater trust and confidence in the mutual fund industry. Rating agencies continuously monitor the performance of mutual funds and update their ratings accordingly, ensuring investors have access to the latest information. The methodologies employed by rating agencies are designed to be comprehensive and objective. They take into account both quantitative and qualitative factors to arrive at a holistic assessment of a fund's merits. These methodologies are regularly reviewed and updated to reflect evolving market conditions and investor needs. By adhering to stringent evaluation criteria, rating agencies strive to provide investors with reliable and consistent ratings. Mutual fund ratings are derived from a comprehensive analysis of various factors that contribute to a fund's overall performance and risk profile. Historical performance is a key consideration, with rating agencies examining a fund's returns over different time periods. This includes analyzing the fund's ability to generate consistent returns and its performance relative to its benchmark. The consistency of returns provides insights into the fund manager's investment strategy and the fund's long-term potential. Risk assessment is another crucial element of mutual fund ratings. Rating agencies evaluate the volatility of a fund's returns, which reflects the potential for fluctuations in its value. Funds with higher volatility are generally considered riskier. The risk assessment also considers the fund's investment portfolio, including the types of securities it holds and their diversification. A well-diversified portfolio can help mitigate risk. Return potential is also a significant factor in determining a fund's rating. rating agencies assess the fund's potential to generate future returns based on its investment strategy, market conditions, and other relevant factors. This involves analyzing the fund's past performance as well as its future prospects. The fund's expense ratio, which represents the annual cost of managing the fund, is also considered. Lower expense ratios can contribute to higher returns. In addition to these quantitative factors, rating agencies also consider qualitative aspects, such as the fund manager's experience and expertise. The fund manager's track record and investment philosophy are carefully evaluated. The fund's investment objective and its alignment with investor goals are also taken into account. By considering both quantitative and qualitative factors, rating agencies aim to provide a comprehensive and balanced assessment of a mutual fund. Section 4. Decoding the 5-star Morningstar rating. Morningstar's 5-star rating system is widely recognized and serves as a valuable tool for investors seeking to evaluate mutual funds. This system assigns funds a rating from 1 to 5 stars based on their risk-adjusted returns, with 5 stars representing the highest rating. The rating is calculated by comparing a fund's historical performance to that of its peers within the same category. This allows investors to assess how a fund has performed relative to other funds with similar investment objectives. The risk-adjusted return considers both the fund's returns and its volatility. A fund with high returns but also high volatility might not receive a 5-star rating if its risk-adjusted return is lower than that of its peers. The rating is based on a fund's performance over 3, 5, and 10-year periods. This long-term perspective helps to smooth out short-term fluctuations and provides a more consistent assessment of a fund's performance. It's important to understand that the Morningstar rating is backward-looking, meaning it is based on past performance. While past performance is not indicative of future results, it can provide valuable insights into a fund's historical track record and the fund manager's investment strategy. The rating should not be the sole basis for investment decisions, but it can serve as a useful starting point for research. Investors should also consider other factors, such as the fund's expense ratio and its investment objective, when evaluating mutual funds. The 5-star rating is just one piece of the puzzle and should be considered in conjunction with other relevant information. By understanding the methodology behind the rating and its limitations, investors can use it effectively to make more informed investment choices. Section 5. CRISIL's approach to mutual fund ratings. CRISIL, a prominent Indian rating agency, offers a distinct approach to evaluating mutual funds. Their rating system emphasizes a comprehensive analysis of various factors, including portfolio quality, fund manager expertise, and expense ratio. CRISIL assigns ratings on a scale ranging from CRISIL Fund Rank 1, the highest rating, to CRISIL Fund Rank 5, the lowest rating. These rankings reflect CRISIL's assessment of a fund's ability to deliver consistent risk-adjusted returns relative to its peers. CRISIL places significant emphasis on the quality of a fund's portfolio. Their analysis considers the underlying securities held by the fund, their diversification, and their risk profile. They assess the fund manager's experience, track record, and investment philosophy. The fund's expense ratio, which represents the annual cost of managing the fund, is also a key factor in CRISIL's rating methodology. CRISIL's ratings are regularly reviewed and updated to reflect changes in the market and the fund's performance. This ensures that investors have access to the latest information and can make informed decisions. CRISIL's ratings are widely recognized and respected within the Indian mutual fund industry. They provide investors with a valuable tool for comparing and selecting mutual funds. CRISIL's comprehensive approach to mutual fund ratings offers investors a holistic view of a fund's strengths and weaknesses. By considering factors beyond just historical performance, CRISIL's ratings provide a more nuanced assessment of a fund's potential. This allows investors to choose funds that align with their investment goals and risk tolerance.